One of the biggest things that I struggled with when I first started trading, and so many people I see daily struggle with, is the idea of buying into fear and selling into greed. It's a commonly repeated phrase that Warren Buffett himself has said that you want to buy when everyone is fearful and sell when everyone is greedy. But for some reason, people have a very hard time grasping that concept. And I have seen many different stocks do this type of thing where they have some sort of bad news come out, the market panics, everyone's too afraid to buy it. But then it has a very nice bounce and everyone's, too afraid to get into it. But then when it goes even higher, they finally chase into it, but then it just tops out. Now, I have seen many times in my trading career that there would be these stocks that would have bad news. So everyone panics and sells. But then there's a very quick moment of a very strong bounce. And in small caps in particular, this bounce is usually like 50 to 100%. And it's in like 15, 30 minutes. There's a lot of money to be made there, but so many people are too afraid to jump into that price action and actually capitalize on it. So I'm going to do my best to try to give you guys my insights of how I've been able to structure a trading strategy around these type of panic dip buys. And I have two great examples of stocks. I traded one of them, I did not trade the other one, but they both fit the system perfectly. We're going to be breaking down the idea of actually buying into fear and selling into greed, flipping the entire script upside down so that you can actually start seeing some consistent profits in the market. All right, so before we get any further, you have to really reestablish what you think trading is. I have entire courses dedicated around this topic, but I'm just going to kind of speed run through it a bit. You have to, number one, understand that you're not going to have every trade be a winner, right? You have to go into a trade understanding that there's always a risk of you failing. And this is a very big thing because most traders, they try to strive for high win rates. They just try to strive for having every single trade win because they're afraid of taking losses. So what this does is that it kind of makes them mentally think about, okay, I need to find some sort of confirmation. I need to be sure that this bounce is going to hold. And typically, all that confirmation really means is that you're not buying at the bottom of the bounce. You're buying maybe 10, 15, 20% higher. So you're automatically losing on that money, but you don't even know it. And also, even if you do wait for confirmation, I'm sure you guys can agree with this, it doesn't mean the trade's going to work anyways, right? There is no such thing as true confirmation. As traders, you need to be more reactive and not predictive because trying to predict the market is a fool's game in the end. Number two, and it kind of goes off of number one, you need to have that kind of max loss level and that thesis idea of, okay, if this trade does fail, I know what I'm going to do to get out. So many traders get into a stock, maybe it holds sideways, maybe it goes against them and sells off. And the first thing they think of is, okay, I'm going to hold and hope. I'm going to hope that it can squeeze back up so I can sell it for a profit because this has to be a winning trade because I can't take losses. You have to break out of that mindset however you can. The way that I tell so many people to do this is to focus on what I call data-backed confidence, meaning that you have a system, a very strict system where you know that if you trade just that setup only over hundreds and thousands of trades, it is going to be profitable. And that helps you break out of the mindset of needing every single trade to be a win and makes you more care about, okay, as long as I'm doing the same thing forever, it's going to be profitable in the long run. And then so number three, you have to focus on trading that system and that system only. So we're going to jump into some examples now of my system that I use to buy these panic dip buys. One of the stocks dropped 60% after they dropped news. The other stock dropped about 45%, but they both really set up in the same exact way and they both had very strong bounces. So let's just jump into firstly MSGM. If you've been trading small caps, then you probably know about this one. This thing had a monstrous rally from like $3 all the way to $80 per share. But then on the morning of February 1st, MSGM was at about $80 per share in pre-market. But then right before market open, they put out this news release saying that they are doing a 3.9 million share registered direct offering priced at the market. Now, offerings pretty much mean dilution, and that is usually very bad news for a company. Everyone panics at it. And as you can see, the market definitely panicked. It dropped from $30 or $60. It dropped from $60 all the way down to $25 per share. But then you can see it had this very strong bounce from about $24 to highs of nearly $50. That's a 100% bounce. And I actually traded this. I posted a shorts video about it. So basically the whole idea is that you have to make sure that your dip buys are based on a strategy. My main strategy is buying previous resistance as new support. I have many lessons about that. Just go check out my other videos. But as you can see here on this chart, we have a very clear previous resistance at about 24 bucks per share, right near 25 bucks. So that is the previous resistance, and my strategy says as long as previous resistance holds its new support, the stock can bounce and is still bullish. So what most people do when they see this news come out, they're panicking, right? Everyone's panic selling because everyone's chasing it up at 60, 70 bucks per share, and they all sell into the panic. And then when it gets down to this point, maybe some people, have this line drawn and they know it's a potential bounce area, but they're waiting for confirmation and they want to be 100% sure that it is going to bounce and they're not going to lose. I don't do that, right? If I know my level, so in this case, 25 bucks, I know that I want that price. I'm going to leave a limit buy there. So then when it gets down to that price, I'm already in. I can't make the choice to wait. I'm already in the price, and it's just up to the market to see where we go from here. Because if the trade does fail, I have a max loss in mind. I've already calculated my risk on the backside. So I know that I'm comfortable with the risk in case it does fail. Now, the thing with these panic bounces, and this is primarily with stocks that have offerings, yes, they can bounce, but you have to understand that it's not going to be a lasting bounce. It's most likely not going to rip up to new highs. So your job as a trader is just to profit off of the range it can make. And what I have found through my back testing is that usually these stocks will just run up, test their VWAP area, and then sell off from there. So your job is primarily just to make sure to trade this range. And then once that bounce fails, you have to sell into everyone else's greed. Because at this point, most people are thinking, oh my gosh, that was such a big selling trap. What if it goes to new highs here? But you don't have to worry about that because you've already made a big profit off of that bounce. So you just have to sell into it and move on to the next one. And as you can see, MSGM, it never went for that new high squeeze, and it is now down back at 12 bucks per share. So you have to understand that it's purely just about profiting off of the panic, buying into the fear, selling into the greed, rinse and repeat on to the next trade. So the next example, very similar setup, is GENE. This one, very similar. You can see it had this big gap up from about $1 per share to highs of over 3 bucks per share on some news. And then in pre-market, they put out news that they had done an offering. So everyone panicked, it sold off. But if I look at this chart, I just say, okay, well, the previous resistance is down here at $1.50. That should hold its new support. And as you can see in pre-market, it bounced off there pretty much perfectly. So like with MSGM, I didn't trade this one, but just kind of going through the motion of showing that the strategy does work most of the time. You would have to just be prepared for this dip buy and have a limit buy waiting at 150s. Now, you did have some time, right? Like you didn't have to get into it right away. You can see it held there for about 15 minutes. So even if you didn't plan this trade before the offering, if you saw it, you would say, okay, well, this is a very good potential bounce level, so I'm going to take the risk and get into it. And just like on MSGM, this one had a very strong bounce from about 150 into its VWAP area at about 215. Not as big of a bounce as MSGM. Obviously, the ranges on both stocks were very different, but still a very repeatable setup, right? And keep in mind, I know you're probably going to say, well, Tony, you don't see these big gap ups and offerings happen every day. Sure, you don't. It's not a strategy that you have to trade every single day. This is just one strategy based off those 3 key ideas I spoke about in the beginning, where you have to understand that not every trade is going to win, have your risk managed, and actually plan the trade based off data-backed confidence. As long as you can stop relying on confirmation because it doesn't exist and just take the risk, accept the risk, and then just see what happens in the market, you will probably get a lot better entries and you will be more consistent in the long run. Remember, not every trade has to win. My win rate is less than 50%, but because I can maximize my winners and minimize my losses, it still is profitable in the end. Too many people focus on win rate and it's just not an important thing. And as you can see, GENE, after that bounce, it's had some spikes, but overall it's died off. So this specific strategy, this panic dip buy, It really is more so a day trading setup where you just buy into the panic, buy into the fear, right? Buy into the fear, sell into the greed, and then just move on to the next one. All right, so that's my basic rundown of the panic dip buy setup. If you have any questions about this, feel free to drop a comment down below. Like I said, I posted a live trading video of my MSGM trade in my shorts. Go check it out if you haven't seen it. And if you want to join me in trading, I trade every single day. I make pre-market watch lists. I do webinars every single day with my team at TradeBuddy. There is a 14-day free trial to join, no strings attached. If you want to see what we're about and see how we trade and actually learn how to trade profitably, click the first link down below and I'd be happy to help you on inside the room. And with that being said, if you enjoyed the video, hit the like button for the YouTube algo. If you want to see more videos, hit the subscribe button and I'll see you in the next video.